Happy December 14th. Crazy, it's almost Christmas.
Yes. All right, we are live on Facebook. Hello, Sammie. How are you?
I am great. Hello, Julia.
Hello. We're both in sunny areas with sun coming into our offices. That's kind of neat to see in the Pacific Northwest this time of year.
You know, it was very overcast this morning, so I did not think the sun would peek through, but now we got blue skies. So I'm quite happy with that.
I love it. All right, well, welcome in everyone. We are excited to host you today. Let me start the screen share. And we will get this up. Where'd you go, Sammie?
I'm here. And as Julia gets that pulled up, just to remind everybody, we will have a portion of Q&As at the very end of the webinar. So as we go through all this information, please feel free to enter in any questions into the chat or the Q&A box, and we will get to those at the end of the presentation. So we do welcome any and all questions that you have. We love to see just kind of what we go through, what questions you have on that, so we can clear anything up. And then, of course, if there's anything deeper that we need to talk about, we can always, we'll provide a link to be able to schedule a meeting. But just wanted to make sure we all had that as well.
Excellent. All right. Does everything look good on your side, Sammie?
It looks perfect.
Okay, excellent. Well, let's get started. So today we are going to talk about retiring in chaotic markets. And what we mean by that is chaotic stock markets. And I am sure that you would all agree that we have been through a very chaotic year, and we will see how it ends. The jury's still out to see if we get a Santa's rally at the end of the year. But chaos nonetheless. So today I have with me Sammie. Sammie is our wealth advisor as well as a marketing manager here on our team at Financial Freedom Wealth Management Group. Sammie obtained her bachelor's degree from the University of Texas. She grew up in Texas.
Woohoo! Hook 'em.
And has over 10 years of marketing experience in hospitality industry, which drastically changed when we went into COVID.
Yep.
And Sammie was actually one of our first hires during COVID, all virtually. And she really wanted to become a wealth advisor, a financial advisor. We said, okay, well, you can do that, but we have to have your help on marketing too. So you wear both hats for us.
Mm-hmm.
When Sammie is not in the office, she enjoys spending time with her husband. She has a 7-month-old daughter who is completely adorable, and 2 dogs. They love camping, hiking, being out in the wilderness, paddleboarding, and exploring Oregon. So Sammie, I will turn it over to you.
Thanks, Julia. Yeah, it's been really neat to explore Oregon before kid and now after kid. It changes drastically, which has been interesting.
Yes.
But Julia, yeah, so Julia is our CEO and founder of Financial Freedom. And she founded this company in 2001. And throughout these past couple of decades, she's really become a thought leader in the industry. And you may hear her on podcasts, on TV. She's writing for Forbes.com. She's being interviewed for a lot of different articles. So it's really amazing to have Julia here talking with us about retiring in chaotic markets, because Julia knows just kind of how she's been through this before. And it's something that I'm learning a lot from, and our clients go back to her time and time again, and the industry does too, for her knowledge on this topic. So I'm excited to dive into this with you today, Julia.
Thank you.
And then a little bit about Financial Freedom Wealth Management Group. So again, we were founded in 2001. We are a comprehensive wealth management and planning firm committed to helping our clients improve their long-term success and pursue financial freedom. And then who we serve, we actually have three kind of categories that we like to focus on. So pre or post-retirement. So that's a lot of you here on this call today, pre and post-retirement and keeping your wealth. So if you're interested in those topics, that's really what this webinar is going to focus on. So you're in store today. And then developing and growing your wealth. So for those who maybe are just starting out or learning to grow their wealth, we love helping those clients and people as well. And then we also have a big focus on financial services for business owners. So whether you're getting started or you're looking for an exit plan, we kind of help all the way through. So those are our big focuses of who we serve. And then, of course, our commitment is to care deeply about you and your financial life. And then I wanted to show you our team. So we have 17 people on our team, 6 wealth advisors, and 11 support staff. And we're all looking good in this photo. So I'm excited to be able to show you that. If you ever call, you'll probably get one of our team members on the phone, and we're all have that same commitment to our clients. So let's get into the big topic, retiring in chaotic markets. Just like Julia said, the jury's still out on what these markets are going to settle into, but we're here today to talk you through that big question or that big thought that you may have right now on, can I retire? Or I had planned to retire, or I'm in retirement. And all of those big decisions that you make around retirement are really focused on 2 things. You make the decision when you're emotionally and financially ready, okay? So one question I want you to ask yourself as we get into the bulk of this presentation, the first thing is, if you don't feel ready emotionally or financially to retire in a bear market, then don't, okay? Retirement is a decision, it's a choice, and we don't want you to make that out of fear. So that's the biggest thing that you want to think about as we're going through all of these discussions today. So remembering that, then if you do feel like you're ready, or you're like, I want more information on how to get ready, or how to, if you are already in retirement, you know, how to continue to feel confident in my retirement, then today we're going to go over reevaluating your mindset and the numbers. So there are, really 2 things: the emotional state, the financial state, your mindset, your numbers. There are things that you can do to grow that confidence in retirement, even in these chaotic markets. So we're going to get started with that. Julia is going to go ahead and talk to you about reevaluating your mindset, and go ahead and take it away, Julia.
Yeah, and I'll share. I love what you said. If you don't feel comfortable retiring when the markets are down, then don't. That's a completely okay thing to do. We talk with clients that maybe had their retirement date set for 22 and just simply didn't feel like it was time because they felt a little uncertainty with the markets being down. And that's completely okay. You get to control that decision. And there's a lot of things we can control, and there's a lot of things we cannot control. And so I think I love this graphic on the right side, things that you can control, things that matter, there's an overlap there, and that's what we should focus on. So we get to decide how we view these markets and this chaos that we really have been in. Do we get the lens, is it a lens of chaos, or is it a lens of, I'm going to find the consistent things that I can count on to create that calm? And part of that is controlling our thoughts. Our thoughts, when you think them long enough, become our feelings. And then our feelings become our behaviors. And so there's like this cycle that happens that most of us are not even aware of it, but that is that cycle that we get into with thoughts, feelings, manifesting into behaviors. And when we increase stress or when we increase chaos, it actually increases our reactivity. Like that fight or flight part of our brain kicks in, and then we're doing things out of reaction as opposed to being calm and proactive. So the goal is to remain in that calm state. Think about what your thoughts are, control those thoughts, and really think about what you should be focusing on, which is, when is your actual retirement day? Are you ready to state what that day is? Or maybe you're already in retirement, and we're going to talk about that too. And I also want to share this. Retirement is not the end. A lot of us think of the retirement as this end goal, but I think it's just the beginning. It's just the beginning of this next phase of your life. And in our experience, retirement often lasts 30 plus years for some people. And you don't stop becoming an investor. So retirement is not when you put everything into CDs and don't invest. Retirement is a time where you continue those investments and you still have a long-term view. In most cases, that is the right thing to do. Now, I will say, if you are needing money off of your investments, then there's a way that you can invest your money that's going to keep some in more conservative places that you use in the next 3 to 5 years. So, that's kind of our approach, that we have different buckets that your money goes into to keep kind of an overall consistent plan that is going to create a successful retirement for you. But understanding how the stock market works is really important to calm all the nerves when we've had a year like this. And I also want to share that working with professionals, that we do this all day long. This is our world. And so I think when you can lean on professionals to bring a steadiness and just a sounding board to hear all of those concerns, and know that the history and the depth of the expertise that we have, I think that is really helpful. And then let's talk a little bit about bear markets, because here we are in a good 11, maybe 12 months of this down market, which started about a year ago. On average, bear markets occur every 4 to 5 years. And so they are typically 10 to 11 months. So we're a little past the average, but I would also say the last 3 years have been anything but average. And so I think there's this reset that we're going through right now, and all eyes are on the Fed to see how they will navigate us out of this high inflationary period. But here's the deal. In all of those bear markets that have happened, they have all recovered 100% of the time. And on average, for the last 100 years, the stock market has averaged 10% a year. So oftentimes we have to maintain that perspective to know that we will get through times like these. So I thought this was a great picture of the 1974 crash. So here it starts at the end of 72, we're going into 73, and then it crashed in the middle of 74, and then you can see that recovery. So when we're in this dip, like when we're in this crash, even the word crash indicates chaos. So like when we're in this downturn, I'm going to say, not crash. It's no wonder we feel scared and emotional. And obviously now we have all of this media and social media that is playing on our emotions. But it's important to look at, when we zoom out, what the perspective is. So here is the time period from 1970 to the mid 2000s here. And that 1974 crash, or I'm sorry, downturn becomes this little blip on you don't even see the big downturn in it. So perspective and the way that we look at things always helps bring that calmness to the situation. And then here I'll share this chart. This is from 1952 to the 2001 when we had or 2020 when the pandemic started with that initial crash. Sorry. See, it's built into our language. You can see all these different things that have happened. Black Monday, the oil crisis, the credit crunch, some wars, the dot-com bubble is on there, the global financial crisis in 2008, 2009, the US credit. Remember when they downgraded the US credit rating? That happened. I started my career about 98 is when I got all of my licenses. So just in that, I've seen a pretty fair amount of downturns. But again, when you zoom out, there's always that upward trend. And I think that once we get through this period, that will continue on and we will see that move on. And here's the thing here's the thing that history tells us. I love this quote. I'm not sure who started it out there, but history doesn't repeat itself, but it often rhymes. And so even though we haven't been through what we're going through right now, we can point to history to give us lessons. And when we can lean on those lessons, that's what can give us the confidence. And when we have that confidence, we can feel that resilience that we will get through this. All of that, though, is easier said than done. So when you look at this chart, I think there's two different things to look at. The orange line, that's a steady line, and then the graph part of it, that's in yellow. So the orange line shows the value of the S&P 500. And then the bars represent how much money was going into the market versus how much money was coming out of the market. And so when the orange line dipped down, so when the market's down, that is when everyone needs and wants their money out of the market. And then when the market's going up, experiencing new highs, that's when everyone wants to invest. So that means that people are buying high and selling low, which is the exact opposite of what we all know our behavior should be, but it's actually what we actually do is something very different. So it's always fun to, like, we've had clients that have been working with us for 15, 20 years. And those clients in times like these just know, oh, it'll be okay. We know it'll be fine. Whereas when we have new investors, it's like this tense and like they're nervous and they have this behavior. So I think, again, it's understanding that we need to take the lessons from history and trust that that will rule in the end and make sense, and not let our emotions rule our financial decisions.
Mm-hmm. Well said. Yeah, those were those were great charts. I just love the kind of the way you look at the downturns, and then like zooming out. It just we can get so focused in the here and now. But even our whole world, right? It's not just about here and now. And if you look at your lifespan, about all the wonderful things that have happened in your life, there are good and there's bad, and it's nice to be able to zoom out and just be able to see that no matter what, that upward trend is always happening. So that was great to look at. So yeah, thanks for going over the mindset piece of reevaluating your mindset as you make that decision to retire, or if you're already in retirement. Now we're going to look at how you can reevaluate your numbers. So a lot of people either have an age that they think retirement is, or a financial number that they think retirement should be. So this is a way that you can kind of put a stress test out on your numbers, on your plan, to see if you were to retire today or maybe in 2 years, what could work best for you. So what is that stress test called? What we do in a financial planning software is a Monte Carlo test. And what that is that we take your plan, so all of the investments that you have, all of the different revenue streams or income streams, and also expenses that you have, all of that, but focusing on all of your assets, we put it into the Monte Carlo test, the stress test, and that runs 1,000 different scenarios with different market conditions. So just to think about that, it's like, okay, maybe you retire today and the market's down 15%. Well, maybe next year it's up 5%, and then the next year it's up 10, and then it goes down again. I mean, that's just 3 different scenarios I threw out. This goes through 1,000 different scenarios, not just for today, through through your lifespan, really, your guesstimated age of death. So between that and retirement, like Julia said, could be 20, 30 years. It can run those 1,000 different scenarios with your plan. So that's a really great way to be able to stress test your numbers, to know that you can have some confidence in those. What happens then is, so I said we put this in a financial planning software. A lot of our clients, we are already doing this on the back end for them. I mean, it is something that we do quite frequently, if not every day, for our clients on the back end. If they have big milestones they're going through, if it's the first time we're doing it, to check in with their retirement plan. But if you're one of our clients, you can rest assured that is something that we're doing. And but it's one of those things that you can see this graph here. I mean, those are all the 1,000 different scenarios and market conditions. And so that's a really great way to, have that confidence in your retirement. So that's one way that you can run a stress test on your numbers. And then the second way, again, might just be rudimentary, or, something that you hear all the time, but there's 2 different things I want you to focus on. One is budget, right? So a lot of our clients who are going into retirement or are already retired, they already have this budget locked down, right? You're already good with it, it. So this might not be something you want to focus on, but if you don't have that up to speed in these down markets, that might be something that you want to focus in on a little bit. But the main thing I want you to think about as you're in retirement, going to go on retirement, are these one-time purchases. And with these one-time purchases, maybe it's $10,000 to go on a vacation, or to buy an RV, or to do remodeling on your home, right? There are many different ways or reasons why you might want to pull out a lump sum. Even if you think it's just 5,000, it's just 10,000, it can really have an impact on your long-term retirement plan if you pull that money out now during a down market. So we want you to practice patience, and maybe you don't buy it today or pull that money out today, tomorrow. Maybe you wait till the market recovers. Maybe that's a year from now. But if you're able to wait and practice that patience, it can really pay off. So there are some checks and balances that you do have to do during a down market. And those are one of the things that I do encourage you to really look at and see if you have to take it out in the next month or 2, or if you're able to wait until the market recovers. It could be a huge impact on your long-term investing. And that's with any downturns that we have in the future too, to remember that.
Yeah. And in all the years that we've been doing planning, I would say that the thing that derails a financial or a retirement plan the most would be these unexpected expenses that come up. Oh, I need to help the kids buy a house. Oh, I need to pay for this. Oh, and it's not included in those initial discussions of, can I retire successfully? And then life happens and all this stuff happens. And so, when the markets are good, that's the time to maybe take a little bit off the top. But when the markets are down, now is the time, like Sammie said, to be patient and wait for the recovery, so your investments have the chance to recover. Because we haven't sold anything. That's the thing about down markets, is you still own the same amount of shares. And so as the market recovers, it's a rising tide, your portfolio will come back with that, because we have those diversified portfolios.
Yep, exactly. Yeah. So another way to reevaluate your numbers is looking at those one-time expenses, looking at your overall budget, remembering those conversations that we had with you or are having with you in your initial retirement plans. All throughout your retirement. So this is kind of the wrap up of the bulk of our presentation. And then Julia, reminder to put in any questions you have in the chat or the Q&A box. And then Julia will take us through how you can contact us if you want to talk more specifically about your retirement plan.
Sure. Thank you. So yes, if you have any questions, we will stay after today and answer any of those questions. So feel free to put those in the chat. If you want to have a conversation with one of our wealth advisors, there is no cost or obligation. You can text the word freedom to 458-777-4458. And that is for if you are a client or you are someone new to us. We are happy to offer that consultation. And what we have found is people find great value from this consultation. And many times we can not only help you prepare or look at your retirement plan, but we can also look at your investments, look at ways to improve your portfolio, save money on taxes. Who doesn't like to save money on taxes? All of that stuff we're very full service and kind of look at everything that has to do with money for you. I will also share that we are partnered with LPL Financial. LPL is the largest broker dealer in the nation. All of our licenses, if we for our advisors, are held with LPL. If you are a client of ours or become a client of ours, your accounts are custodianed at LPL. And they are part of SIPC, which is Securities Investors Protection Corporation, which protects against the failing of the broker-dealer. So we are happy to answer any questions about that. And then I'm not going to read all this, but I'll put all this fine print up here as you think about any questions you would like us to answer today.
Yes, the fine print.
All right. So let's go back to this slide, and we'll leave it on that slide, and we can ask any questions. We have a comment that we're an independent broker-dealer. So yes, that is important, as the word independent, meaning that we are not with a company that has its own proprietary products. So the funds and the investments that we use are go through the due diligence process at LPL Financial, but then that they are really up to us to decide what is best for our clients. We're not told what to sell. Important point. All right, any other questions?
Oh, I see one here. So if we know we're going to need to withdraw money in 2023, is it more cost effective to pull it as we need it likely quarterly, or do a lump sum?
Yeah, really great question. So most of our clients that are in retirement actually pull money monthly, because they are paying for their monthly bills. So it's just like setting up a paycheck in retirement. But if it's for like maybe one-off expenses like travel or one-time expense, then I would say as that need arises, although I would say if you don't need it for a while and the market is down, then it's best to wait to see if you can get that recovery. Or sometimes if we have a Santa rally at the end of this year, it would be looking at, okay, now if you don't have that conservative bucket of money, like, okay, maybe now is the time to take some off the top as the markets come up. We're up about 10% from the low of this year. And so that's a pretty big movement that we've seen just in the last couple months.
Mm-hmm.
So.
Great. We have another one here. What's the difference between FDIC and SDIC insurance for retirement? SP, I think the other one was SPIC.
Yeah, SPIC. So FDIC is for banks. And so if you have money in the bank, then that would be FDIC. And so like we do have CDs, we can do institutional brokerage CDs with our firm, and those would be FDIC. That would be the only thing pretty much that we would, you would know if it's FDIC with an investment firm. The SIPC protects investments and brokerages. So one is for banks and one is for brokerages.
That was a good question.
That was a good question.
Great. Well, I don't see any other questions. Well, maybe just a few seconds here if you're typing. And yeah, I don't see anything else. Well, I hope this was helpful for everyone. Oh, we do have one more here. Do you have the best way to set up a budget? Man, what I found is the best way to set up a budget is what is going to work best for you. Some people like an Excel sheet that they have everything on. Some people like to do it through an app like your budget, or I think that's one of them. But there are a bunch of different apps that of course have budgeting. I would start, if you don't have one yet, or if you've tried all the different ways and nothing has stuck, then, I would just set it up in a way that is something that maybe you look at on the daily. So it reminds you, right? Maybe you set up a reminder on your phone to, at the end of the day, just look at your expenses. So it's not overwhelming at the end of the month. So just kind of check back, at least from what I found, check into what works best for you, whether it's phone, computer, an app, and just lean into that and know that your budget is something that is an evergreen. It's something that you do all the time, but also something that you lose a lot of those times too. And it's okay to just pick it back up and then continue to keep going. Do you have any other thoughts on that, Julia?
Yeah, the way that, most of us have similar expenses every month. And so understanding what is your normal budget, what's the income and the outflow. And then if you are not retired yet, are you on track? Like, are you saving money where you should into retirement, into savings? And then, so typically I kind of back into it that way, because if I know everything's taken care of, I know the basic expenses are happening, I know retirement's happening, I know kids' education's happening, then the money left over then becomes the discretionary. And so, but if you don't have the financial plan and the intentions of the solid, like, that you're saving X dollars for the future, that's when you have to really go and find that money to be able to put aside. So I mean, there's lots of apps, like you said, Sammie, there's lots of different ways that you can do it, but it's the one that's going to work. So a lot of times just a simple piece of paper and like, okay, here's everything, here's what's coming up. Will do the trick too.
Yeah.
Okay, well, great job, Sammie. So we will look forward to seeing everyone in the new year with our new schedule, which will be coming out. And we hope everyone has a safe and warm holiday season.
Yes. Happy holidays, everyone. Bye.
Bye.